Good evening. This is Marjan Zaman here, MZ Trades, founder of Swing Trade Group, and we are here today to learn about volume trading. So I hope you're all excited and just want to get a little bit on how to understand the market on a higher time frame and also on a lower time frame. So to start off, if anyone would love to just introduce yourself on the comments or tell us where you're from, and if there's any questions you have that I can look at through the webinar, I can try to answer them in the middle or near the end. So our webinar today is on understanding volume. And first I want to start off with a little disclaimer that obviously anything that you hear today is strictly for educational purposes, and I'm not an investment advisor, broker dealer, or financial planner. So all the risk that you take is on your own, but please do your due diligence and seek financial advice from those who are qualified to place any trades or investments. So today we're going to look at what volume really tells you. We're going to look at volume profile. We're going to look at volume and breakouts. We're going to look at divergences, and we're going to look at volume weighted average. And we're going to look at putting it all together with potentially some of the other stuff that we looked at in our previous webinars. So what volume really tells you is how much of the market is actually participating in any certain day, any certain candle, whether it's a 5-minute, a 4-hour, a day, or a weekly candle, or specifically at specific price levels. So at different levels, you're going to understand whether something is bullish or bearish, whether at a certain breakout level, if there's high volume, or if there's a consolidation with low volume. And you'll see what this really means today. So when you have high volume, that's when you can really see that the institutions are making their move, that they are either trying to steal shares or really move the price up or down through, when they decide that, a consolidation is over or that, a decision has been made by the market. And this is what, as a retail investor, that you want to try to follow along. And when you're in low volume areas, you see that this is kind of what, retail traders are kind of just buying and selling at these random prices. And there's a very thin liquidity. So quickly, when institutions want to make a move, they can actually change the price very quickly. So this is kind of dangerous for retail investors. So it's very important to see what are the high volume moves so that you can follow along with what a real move is supposed to be. So when you have a breakout, let's say that the price has been consolidating and there's a key level, whether it's a Fibonacci extension or Fibonacci retracement. But if you see that there is a increase in volume as you're going up and you're going through that level, that can potentially indicate a real breakout. A fake breakout is when you see not that much volume and then a significant amount of volume that brings you back into the range. And that's a fake out. So this is how reading the volume ahead of time can help you, understand whether you want to be in a trade or out of a trade. Next, we have volume dry up. So when you're actually consolidating sideways for some time, and the volume is very low, you can expect that there is going to be some kind of breakout. The institutions are going to decide that, maybe we've made a floor or we're unable to continue higher and we're going to have to drop. So again, when you see a low volume for a consistent amount of time, then you can expect a big move. So you can potentially position yourself better. So we want to also be able to see volume divergence, which is when the price is going higher with small displacement candles, but the volume is going down. That's telling you that potentially there is going to be a reversal or that there is some weakness happening. So this can help you position for potentially setting a stop loss once the volume starts to dry up as you're going higher. And the same thing is true for the opposite, that when the price is going down and the volume is going down, then potentially the sellers are losing their pressure, are losing power, and then the buyers are going to come in and they're going to drive up the price. So this is a good warning sign when you see a decrease in volume. So let's look at a real life example with looking and factoring in the VWAP. This is the volume weighted average price. And this is something that I highly encourage everyone to look at. When you have your trading chart, personally, I use TradingView. It's really amazing. It tells you, it gives you all the data for different time frames, and you can put a ton of indicators on to really get more data and understanding of the price. And here on this chart, what I did is I actually put a VWAP, a volume weighted average price, locked in from before even the COVID crash. So it's the low of the market in 2019, which was when we had our first major correction after our 2010s bubble run on the NASDAQ. So from that low, you can see that the VWAP over years is going up. And you can see that in major downturns, we've actually used the VWAP as a support for institutional buyers, and all of the heavy volume for the best buys ever in history, they all occurred below the VWAP. Now, when you're looking at a specific stock, let's say, what is it? Allbirds, right? This company that is turning into maybe like an AI company or whatever, right? Like this can trigger pump and dumps. And sometimes what happens is the VWAP, when your price is below VWAP, it can indicate weakness and that it's going to continue going down. So for any average stock, you can see a lot of weakness potentially. And maybe you don't want to buy it because, it's actually going down and it can keep going down. But what is important to see is, what if you reclaim the VWAP? What if you, after you're below the VWAP, you come back up on top of it, just like the NASDAQ has done over here in 2020 and in 2022. This signals bullishness and a reversal. So the VWAP is very important because it tells you, it can indicate, maybe you're not going to get the best buys because it's actually risky, but it can actually indicate when you can have a really great buy that is not, exactly down, getting the perfect bottom of the market. So let's see what happened here. So in 2019, there was that low, and several times the price got close to the VWAP and then still bounced higher. In the COVID crash, right before the COVID crash, we had a huge markup in price, and then we corrected back down, and that's where we had our best reversal. And then you can see that here I have standard deviations away from the VWAP. And what this can tell you is, maybe a certain trend line or a certain range that you can follow. So if you kind of were using this VWAP over time, you could see that, okay, we're basically jumped to the second standard deviation because we're very bullish, right? We're very bullish on technology. And then we can see that at some point, the price literally could not expanded, and it could not break over this line anymore. And potentially those were the best times to sell. And then we are traveling down, and you see that there's some volume over here, some high volume on the first standard deviation, got some bounces, but it couldn't sustain higher. And this kind of gives you a sentiment of what's really happening in the market. And you can see that, yes, we had some good bullishness over here because a lot of people are selling, but a lot of people are buying as well. The institutions are really buying this level. And this actually helps you to see the future, that, maybe when we reclaim that level later, we're going to explode because this was a great price. And these were also obviously great prices. And then as we go up, you can see that now we've come back to one standard deviation above the VWAP, and then we are not able to go below too far, and we go back to the second. So now this is actually helping us to understand that maybe the market wants to go higher. And here, let me zoom in a little bit over here and show us that, it's very important to also have like a mentor or some guide or something to really help you see, what are the key levels in the market. And that's something that I'll help you with Swing Trade Group, because we use these Fibonacci extensions and retracements to see where is the market going to be, where is the volume going to play a huge role in deciding if we're going to keep going higher or lower. And what's so interesting over here is that this velocity that we bounce from this first standard deviation VWAP over here is so great that, this actually took us to all-time highs, breaking our previous highs, and the market was unable to really process how fast it was going high. And if you use that new anchor level, that new low, as your anchor for your next VWAP, you can see that basically the market always wants to get a discount. The price, we can see that the market is extremely bullish, but the market did not want to buy at that price. It wanted a discount. So it waited for price to hit the VWAP. And then when we lost the VWAP and reclaimed it, look at how explosive the market moved. So this is showing you how powerful it is to really understand how VWAP plays a role in market cycles. Next, we want to look at volume profile. So volume profile is another indicator that you can put on your chart where you're going to see where the highest level of volume occurred at certain price points. So you can line this up and you can see that there's a value area high and a value area low. And that's this range of where 70% of the value was in that certain trading period, such as a single day of trading. And then the POC is the center. It is it's not necessarily the center, but it's the exact level where the most volume occurred. So when you have that can actually, when you see that, you can estimate that the price will likely go back to the point of control. Sometimes when you're trying to escape this range to the upside or to the downside, the price will try to escape, but then it'll retreat back to the POC. And then when it retreats back and is unable to break through, or if that POC holds, that can indicate that, let's say that the price was falling here, but it came back to the POC and couldn't get above, then maybe when it falls, it's going to lose this value area low. So this is a good way to, enter like a downward position. But if you're, going higher and then the POC is holding and the volume is increasing as you're going higher, then you can decide, this is where I want to go long. And one way to really trade these value areas is to look at them day by day, right? You're coming into the market. What happened yesterday with the value area? And then what happened the previous day before that? When you stack them together, you can see how price day after day is interacting with these certain levels. So now let's look at that in the NASDAQ recently. So, this is what everyone is really wondering, what's price going to do tomorrow, right? We can see that in the past, right? You can see that these POCs and these value areas, they kind of stayed consistent over here. And you can see that when we look at the the VWAP, you can see that the price kept getting bought up very aggressively at these VWAP levels. And it turned back into this value area. Now, that's very bullish, right? We're obviously in a very bullish cycle. But then people are wondering, like, I just want to short the market. I think that it's very bearish, like it's going to go down. But let's just see what happened with the volume. First off, over here, this is a very high volume area. So we traveled up to this price in the 27,000s and we maintained that level. We tried to lose 27,000, but then with high volume, we jumped right back into the 27,000 range. Then we broke through the value area highs from the previous day, and this indicated more strength. But then you can see on that next day, there was some volume over here that took us to even a higher high, but it was low volume. And what did I say? Like, if you have low volume, then maybe a lot of times you can retrace back. So what did we see the next day? That once the New York session opened over here, you could see that there was weakness, and then it actually dropped the price low. So then what happened next? The price traveled back down to this high volume node. So I want you to pay attention to these low volume nodes and these high volume nodes. Sometimes the price is magnet towards high volume nodes that it knows that there's going to be a lot of participation in the market. But then also the price will want to sometimes test traveling from a high volume node out to a low volume node. So this is what happened over here. We went back to this high volume area and we came back up over here. And we maintained some volume, but you could see that every time we went to the upside, we rejected the value area high. But every time we tried to go deep into this value area, we got completely absorbed. And you can see that the POC, the point of control, is actually unable to really shift down and to expand us lower. So what does that leave us with? That leaves us with all the shorts getting squeezed and for us to make a new high. And potentially now we're looking at all-time highs. The next thing that we want to look at is climactic volume. So this is what we're seeing in an uptrend or in a downtrend. What happens is when you have a huge amount of volume at a certain level that can't move the price any further, that is potentially a reversal zone. So and what that means is that there's some exhaustion that, they really can't sustain this kind of growth anymore. So a lot of sellers come in, and then this can signal a new shift in the market direction. Let's look at MSTR. You can see that MSTR had an explosive growth, but then it had a blow off the top over here. And this is also including some Fibonacci extensions that I have here that you can learn from me in my Discord group, where we use these Fibonacci projections to really find targets. And you can see that this Fibonacci extension target that I had exactly lined up with the top for MSTR back when it bubbled in 2024. So when you see this, you can see that, okay, this kind of first red day candle, it can signal an entire reversal in the entire market. So, it's probably a good time to sell. Maybe you couldn't sell at 550, but you were able to sell at 400 something. Before now, it's in the sub 200s. But this can also signal a lot of strength in the market. So this is SOXL. SOXL is a leveraged chip ETF. And what we see here in 2025, that the selling pressure finally couldn't take the price any lower, and there was a huge amount of volume over here, a huge amount of volume that turned the candle green. And look at that. That's around $6-7 for SOXL at this level. And what happened is this was the highest, this was probably the best buy in history for this chip ETF, because it went from $6 now to around $120. That's like a 20-fold increase in about a year. So looking at volume is so crucial because it can signal a reversal in the market. After this high volume candle, look, we still got a lot of high volume buying every single day. So whether you bought it at $6, $7, $20, $15, right? These are all great buys, and it took the price up even more. And you can bet that the institutions are heavily invested in this, and they're going to let the price just explode now. And you can see that there's very little volume even taking all this up, because look at all these participants over here. And have they exited the market? No. So you're going to need potentially an equal amount of volume to really show weakness in the market. And what we're going to see with SOXL, which I think is going to happen, is that over many years, we're not really going to see that amount of sell-off, because yes, you could take profit, but you probably want to buy back in at another great opportunity. So we also have to be careful about maybe exiting our entire position too early. So a lot of people might think that AMD had a blow off the top recently, going to $350. But you can see that we just basically retraced over here, and this was not a key level of rejection. And MSTR, that was after, a six-fold increase in price. That's where it blew off the top. This is actually just a two-fold and three-fold increase in price after creating a nice double bottom pattern. And this double bottom pattern I shared with everyone in the Discord, and I gave the signal to buy AMD under $100, and then again at $180 for this run up to 345. And what we see over here is that our bullish target for AMD is around 347, 345, that if we break this level, we're going to be extremely bullish. So it's not actually a final target, but rather it's just the beginning of a potential expansion cycle. So next, we're going to look at accumulation versus distribution. So this is something that you're going to learn much more if you trade with me live and you see that, what kind of price action are we seeing while we're going sideways? Are we forming a cup and handle pattern? Are we forming a double bottom pattern? Are we forming a Wyckoff distribution pattern? All of these things are going to tell us whether someone is accumulating or distributing. And what we basically are seeing right now in the market is bullish accumulation. Every single dip is getting bought up because there's an expectation that the price is going to keep going up higher. So there's no real distribution happening. Real distribution, you can see if we go back to, let's see, over here, if you look at the 2025 beginning pattern, that is a distribution pattern over here. Distribution happens when you oscillate for a while and you cannot make higher highs. That's a good signal that we're going to have a major downturn. But then you can see these kind of curves. These curves from the downside indicate accumulation. So this is distribution, this is accumulation. This is bullish accumulation, a bull flag here, and then another bull flag over here. And then this is a distribution over here. And again, we pumped up over here in 2025, 2026, and now we distributed very slightly, and then we immediately broke through that. So this is also a bull flag. And the reason I want to share all this with you is because, I really want everyone here to succeed. I want people in my Discord to succeed. I want the Muslims to succeed. I want the people who I love and care about to succeed. But the media is going to basically want you to not succeed. They're going to want to tell you to sell as much as you can to them when they think the price is going to go up. For example, what the media was trying to share in the last several months was that the QQQ is extremely weak under 615. And look at what that means. When the market when retail seeing, under 615, I should be selling it because it's very weak. But what the media was trying to do was make you sell to them under 615 because they wanted to buy from you under 615 because it's on a discount. And that's what's really sad. Look at the way that they, share their words and try to manipulate the masses. So now look at us. We're at 664 with no just complete upward momentum right now. And now you're going to wish that you got those 615 buys. So joining Swing Trade Group, we're going to be able to teach you how to read the market, how to see when are we getting too high. And I'll be sharing all of my projections, and I'll be sharing all of these key levels because, yes, volume is just one aspect. And I only wanted to share one aspect this time because you have to put everything together. And, I didn't want to overwhelm us with more than, just volume today. But hopefully with this webinar, you'll be able to see that volume is extremely important, and it can help you see whether you are maybe making a potential low in the market, if we're having a high volume double bottom, or if we're breaking out of previous consolidation ranges, and whether we want to join the market or exit the market. So with that, I'm going to conclude here on the official webinar. But if there's anyone who has questions and wants to learn more about Swing Trade Group, you can put anything in the chat, and we can move forward from there. Thank you so much. So I'll just stay on the chat for a little bit if there's anyone who has any questions. Okay.